Hey guys, welcome to my YouTube channel. So this video is going to be on how I use supply demand with multi-time frame analysis, as well as how I use it in conjunction with my setups. And this video is really going to help you out with learning supply demand, how to find confirmation, how to look at different time frames, and really get a better risk reward and win rate for your supply demand setup. So we can go ahead and dive right into it. So the few simple processes that I use in order to do this setup is 3 easy steps. The first one is going to be start with the higher time frame analysis. Then you're going to second step, which is to zoom in on the smaller time frame, and the third one is to wait for the pullback after the initial reaction. I know it's a little confusing, so I'm going to dive into it right now and show you exactly what that means and how that works. So you can see on the stock called RUN, RUN, we have a nice daily demand zone right here. You can see price drops, we form a base, we have a strong rally, leaving institutional orders down at this demand area. So you can see over the past few days, price is able to bounce off this 23 demand zone up to about 25.46. So far it's been a good reaction. And typically what you can do with these supply demand zones is you can enter right at the top of the demand and then put your stop right below the demand zone as well. So that is something you can do with your supply and demand setups. Now, one thing that I like to do personally is wait for confirmation, and you can do that in a few different ways. The first one being, waiting for that smaller time frame setup to occur. So, as you can see, if I zoom in on the 15 minutes, so step one being find our higher time frame analysis, right? We have our demand zone here. We're looking for longs in this 23 level. So that's where we are going to be looking for our initial longs. But next step is going to be zooming in on the smaller time frame. So if I zoom in on the 15 minute here, you can see price had a nice reaction out of this zone. We actually formed another demand zone within this other demand zone here on a smaller time frame. So this is very key and crucial when I use my trading, because I want to make sure that my higher time frame aligns with my smaller time frame. So after we get this bounce here, yes, you could have got in right at 23, put a stop below 22, and this trade would have worked out for you. But if you want to increase your win rate a little bit, what you can do is wait for the smaller time frame. So if I zoom in here on the 15 minute, price makes a base here, a rally up. We actually come down and touch this 15 minute demand zone here. So you can see we form another 15 minute demand right here. Price touches that and ends up rallying all the way up to this gap fill here, which will act as a supply zone. So doing this allows you to have a much better risk reward. You can see before we were risking about $1 from 23 to $22. And here we were risking about from 22.83 to 51, about 30 cents with a much better risk reward. So that's a good example of how I use multi-time frame analysis in my trading. I'm going to show you another example right here on Microsoft. So on Microsoft, if I zoom out on the daily, you can see price, we stop hunted this low here, formed a demand zone, we dropped, formed a base, and then rallied higher. When price came back down to this demand zone, yes, if you were swing trading, you easily could have got in right here at this 220 mark with a stop below the 213. Would have been a very good trade, a very good decent risk reward. But if you want to increase that win rate, right, sometimes supply demand zones don't work 100% of the time. So one way you can do that is, again, looking at a smaller time frame. So what I do is I zoom in on the 1 hour. Okay, and you can see that, price bounced off this demand. We ended up making another demand zone here, formed higher. We're able to break this supply zone as well. So it shows that bulls are now in control instead of the bears. What you can do is essentially wait for a pullback for a good entry. Now that pullback that you enter on doesn't have to be supply demand based. It can be on a few different conditions or parameters. For this example here, if I take my Fibonacci retracements from the low all the way up to the high, you can see that we hit the 50% mark beautifully, bounced off it, and made a new high up to 245. So if you wanted to, a certain trade you could do here was getting in right at this 230 on the 50% retracement and putting the stop right below this demand zone here. If I go on the daily and draw that demand zone out, it would look something like this. So overall, if I zoom in, you're getting in at around 230, 231, risking down to about 227, around $3 to $4 stop. And we ended up seeing about $15 move in profit. So a very good risk reward. And you have that confirmation in place that that this demand is going to hold. Bulls are now in control. and you can get in at a much better entry. I'm going to show you one more example here on Chewy. So again, Chewy, you can see price is in a clear uptrend. We're making higher highs and higher lows. I can draw that in here, make a low, high, lower high, higher low, and then higher high, and we continue this process. So obviously we're in an uptrend. We only want to be looking at buying in demand. We don't want to be shorting supply in an uptrend. So you can see here, price ends up coming off of this demand here. Now again, yes, you easily could have got in right here at this demand, but if you're looking to increase that risk reward rate and get a better entry for risk reward and your win rate, what you can do is wait for a better setup. And so what you do is you zoom in on the smaller time frame. You can see, okay, price bounced off this demand. We are also able to break this supply zone here. So I can turn that red, show that as supply. So now that price has been able to break supply, that means we are now in an uptrend again. So on the shorter time frame, you can see that price was making lower highs and lower lows. So we're in a downtrend. Now we finally break this high here. We get a change in trend on the smaller time frame. That's when I know, okay, bulls are in control. I'm very healthy to be long now instead of looking short. So what you can do is wait for your pullback to get in long. Now, obviously, we have another demand zone form right about here. Price didn't end up touching that. But like I said before, you don't need to wait for supply and demand to be your exact entries. You can use a combination of different strategies for your entries. For this example, a fair value gap would have been a very good entry here. So you can see price dipped into this fair value gap, would have been a beautiful long. I believe also we hit the 50% retracement. Yeah, so we came down, hit that 50% mark as well. So using Fibonacci retracements as well as fair value gaps, you could have got a very good entry in the stock here. And you can see the price soared higher. So again, a very good entry, very good risk reward. And you get that increased confirmation, which is going to increase your win rate in the long run. So with that being said, guys, let me go ahead and show you the 3 steps again. So step 1, start with the higher time frame analysis. Step number 2 is going to be zoom in on the smaller time frame. And then step number 3 is going to be wait for that pullback after you get that confirmation of trend. That's going to help you see an increase in your risk reward as well as an increase in your win rate. So hope you guys enjoyed this video. Let me know in the comments below if you want me to make more, and I'll see you guys in the next video.